Our latest video was talking about the narrow leadership in the markets. A small number of mega cap tech consumer communications names leading the market higher, while the average stock has been struggling in 2023. Today we're going to look in detail at the 5 FAANG stocks. What are the key levels we should watch for each one of them? Hey guys, Dave Keller here with Market Misbehavior. We talked about narrow leadership a lot recently because while the major averages have been moving higher, it's a relatively small number of stocks that are actually having a really strong 2023. The FAANG stocks come to mind. Then there's others, things like semiconductors, gold stocks, right? And isolated other ones in different sectors, sort of peppering around some strong performance. But the average stock is actually flat to down for 2023. This is why breadth conditions have not been particularly rosy, even with the major averages testing resistance, the S&P pushing above 4,100 going into the recent holiday weekend. Today what we're going to do is dig into the 5 charts of the FAANG stocks, which I guess that acronym is becoming less and less accurate as companies are changing their names, but we'll look at Meta, Apple, Amazon, Netflix, and Alphabet or Google. And we'll look at each one of them, just focus on some key levels and trends to watch on each of them because they overall have been fairly strong, although a couple of them much stronger than the others. You'll see what I mean here in a second. Before we get to those 5 charts, by the way, if you like this sort of thinking about technical analysis, behavioral finance, and investor psychology, won't you subscribe to my channel? Also, give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below. Which of these 5 stocks do you think is the best opportunity here and why? Let me know in the comments below. Now we're going to start with the chart of the FAANG Plus Index. This is $NY FAANG on StockCharts. It's an index produced by the New York Stock Exchange, and it's sort of the FAANG and FAANG-like stocks. So other names like Tesla and like Twitter, I believe, some of the Chinese internet names are incorporated into this index. So it's sort of the FAANG-y sort of stocks that are out there. FAANG plus some other things that are very, very similar. Now if you look, while the S&P is just trying to get above its February high, this FAANG Plus Index has already done it. And if you look, the August peak was around 5,800. We sort of tested that peak again in February, and now in the last couple of weeks, we've actually powered to a new swing high, almost a new 12-month high for the index. You can see the relative strength has been strong year to date because, as we mentioned, the FAANG stocks have been, some of the brighter spots in the markets year to date. Now, what's driving these things harder? We'll start with the 2 probably most constructive patterns, and again, not necessarily telling about the forecast going forward, but more just describing the behavior that we've seen in the last 3 to 6 months. Hard to deny that Meta and Apple, probably the 2 obviously, with the strongest technical characteristics right here. What's striking about these 2 charts is I think you can draw trend lines to very easily identify the trend, to quantify the trend, and then figure out when it may be exhausted. What I mean by that is a trend line is simply a visual technique, a best practice technique in the technical toolkit, just to help us visually quantify a trend, right? When you see a price moving, you sort of take a line. In an uptrend, you take a line connecting the lows. In a downtrend, you draw a trend line connecting the highs. It's not, I don't think, the world's most ideal timing tool for anticipating reversals. However, I think it's a great visual representation of the pace of the trend. And what's interesting is once you draw a trend line on your chart, you save it. If the price gets really far from the trend line, that tells you one thing. If the price actually breaks the trend line, that tells you something different. But in either case, it tells you that something is different. As long as we keep testing that trend line, it tells you that the trend that has been in place so far continues to be the case. What has gotten us to this point, probably nothing's really changing. There's a similar sort of balance between optimism and pessimism, between buying power and selling pressure, and it's netting out to a fairly consistent trend. The key to drawing trend lines, by the way, I would argue is using log scale. I think that's a very important part of this, particularly if you're looking at daily or weekly or any longer time period of charts. Because the longer time that you incorporate, log scale is a better way of visually representing the change in price over time. And if you're drawing trend lines on an arithmetic scale, particularly a long-term chart, it is not a great idea because what you're basically doing is creating an artificial trend that's not really representative of the trend. Stocks tend to move on percentage terms, not on dollar terms, and that's why log scale is so important. So I've drawn a trend line. Again, it's not the world's most perfect trend line because we're kind of eliminating this, but if you draw the trend line like that, I guess two things you could do. One, draw an initial trend line like this, and then maybe say, all right, the price has gotten a little bit further from the trend line, so maybe I want to do another one there, and it's a little steeper. That is probably the strict view of the technical toolkit, what Edwards and McGee, who wrote kind of the Bible of technical analysis, what they would probably suggest. I tend to have a little more wiggle room in trend lines, and I tend to just draw a line that I think best represents the trend. And if I start the clock at the November low, I can see that by drawing a trend line here, we briefly undercut, but sort of rallied back. And I think this represents the sort of demand curve, right? Or sort of the escalation in this trend going higher. And what this tells me is, as long as Meta remains above that trend line, this uptrend is in place, right? Because it keeps an upward slope. We keep moving higher. It's gonna continue. At some point, the price is going to break down through that trend line, I think, without a doubt, right? I mean, very, very high likelihood that at some point, maybe not tomorrow, maybe not next week, maybe not next month, but at some point we will break that trend. As long as I continue that trend line with that slope, and as long as we remain above it, conditions are okay. If and when we break that trend line, I think that's a challenge for Meta. So that's chart number one. Let's look at Apple, which I would argue is the second chart fairly constructive out of these, particularly coming out of the 2003 low. So while Meta actually made its low in the fourth quarter of last year, you can see Apple was actually making a new swing low going into the beginning of this year. Look at the beginning. January 1st, it's actually going lower, the first trading day of the year. From there, though, that was the low, and from there we've reverted higher. Same thing. I'm drawing a trend line from the first, sort of that ultimate low, connecting it to some subsequent lows. We can see that that's bounced off of that level two subsequent times, which means this is a valid trend line. Same as with Meta. I think as long as this price continues above the trend line, conditions are good. Other things to note on this chart, we're above two upward sloping moving averages. That's pretty encouraging. The momentum is strong but not excessive. That's encouraging. What is discouraging, or I guess a potential issue with this chart, so we're going up to this area of resistance. I like to think of resistance in a range, not a particular level, but more of a resistance range. You can see sort of this 172 to 180 range. This is the initial top in December of 2021. Look at how many times we found another high in that same area. So as this trend continues, we're now going to have a competing narrative, right? A strong uptrend off of the January low. However, we're now facing significant resistance. So one of two things happens. Enough demand, enough buying power pushes us not just to that resistance area in pink, but through the resistance area, which I would argue would be a very bullish development, telling you about the next couple months for the S&P 500, the NASDAQ 100, or we stall out at that resistance level once again, which would mean we most likely break that trend line, and that would tell me that the uptrend is now exhausted, and look out below for the major averages. So that's the second chart. I think both Meta and Apple, it's all about that trend line off the lows. The chart out of the five that we're going to talk about that I think looks the most maybe neutral would be Alphabet, right? What's encouraging about the chart of Alphabet is we've made a higher low, right? The ultimate low for now was in November of last year. We made a higher low in January. We made another higher low in February and again in March. And from there, we keep bouncing off that. So higher lows is an encouraging sign. Higher highs is encouraging as well. You can see we had the swing high here in December. We overshot that one in February, which was great. We stalled out at the 200-day moving average. Made a higher low in February and March. Broke yet again. We are still trying to make a new high. Friday or Thursday, this is the long holiday weekend when we're recording this video. On Thursday, we actually made a new swing high, a new closing high for the year. The question I think going into the next week or two is if we're able to hold that and break above. Even more important, can we hold the 200-day and hold this most recent swing low, which is right at a big round number of $100 a share? I would argue the level for Alphabet is this level right here. $100 a share basically encompasses the most recent swing low from late March. It's right about the 200-day moving average, and it's a big round number. So as long as Alphabet stays above 100, not bad. If and when that would break, that would be a concern for now. Fourth chart we'll look at, now we're getting into the two that I would argue are the less constructive, Netflix and Google or Alphabet. Let's start with the chart of Netflix. So for now, right, it hasn't been bad. And if you look back over the last 12 months, maybe one of the strongest longer term stretches, right, in terms of, others like, Apple are still trying to recover from their previous deterioration period. Something like Netflix has been in a pretty decent uptrend, for about 10 months. The last month, though, March, was actually pretty rough, and February was actually the beginning. Made a new high in February. From there, broke below the 50-day moving average. That's after holding it a bunch of times during this uptrend. Now we're sort of right back above the 50-day, and that's why I would argue it's sort of it's sort of range bound. At this point, while the longer term trend still appears to be positive, I think you're stuck kind of in this range on Netflix. So if I'm looking at this chart, I would key in on two particular levels. One would be this level above, which is around 375. That's the swing high from February. The other one would be the swing low right about there, which is currently around 280, we'll call it, maybe a little higher. We'll call it about 285. That's the swing low from mid-March, right? So what I would say is the general way I would think about a chart like this is now we're sort of range bound. Starting in October, November, we first kind of got into this range. We finally established what has so far been the high for the last 10 months or so, around 375. That's right about the highs from the first quarter of 2022, by the way. We then sold off and tested once again support around 275 to 285, which is where I'm putting this red line. At some point, one of these levels has to break, right? Either we break above 375, which I would argue would be a big thumbs up for the bull case for stocks, or we fail, we put in a lower high around 350 and then put in a new low and we undercut support around 285. I think the 200-day moving average is also an important one as well. So Netflix gets below 275, and I would argue this chart all of a sudden looks a lot weaker than it has, sort of completes that bearish rotation. So 275 to 285 on the lower end, 375 on the upper end. Those are the levels I'd be watching probably with Netflix. This brings us to our final chart, Amazon, right? And I'm looking at the chart of Amazon. Clearly, when we've looked at those first four charts, look at how bearish of an overall trend we've experienced here versus the other charts. While those other charts were all sort of getting above their 200-day moving average, and it's talking about that as potential support now, Amazon is actually still below its 200-day. After breaking below it in the fourth quarter of 2021, really the beginning of 2022, you can see a retest from below in March and in August and in February of this year, and we're still below the 200-day. So until Amazon can get above its 200-day moving average and stay there, I would argue this is still a bearish trend because of that basic measure of where is it at below the 200-day. One of my mentors used to say, nothing good happens below the 200-day moving average. So anytime you put in a higher low, anytime you see this nice move higher, that's all fine, but until we can push above the 200-day moving average, it's just not enough to tell you that there's staying power potentially for that new uptrend. So it's encouraging that we put in a higher low around 90, but I would say out of these five charts, Amazon is the one that still has more to prove before you can consider it a bullish chart and you're looking for a sign that it turns negative. I would say Amazon at this point, my default read would be more of a bearish read until we can get above the 200-day moving average, currently around 107.25. If and when that happens, and ideally you can get to a new swing high above 114, I think that chart is still lower. What do you think of these five FAANG charts? Meta, Apple, Amazon, Netflix, and Alphabet or Google. Which of those five do you see as the best opportunity here and why? Let me know in the comments below. Don't forget to subscribe to my channel and give the video a like if you appreciate it. We'd very much value that nod from all of you. Have a great one. We'll talk to you again soon. Bye now.